Let's welcome in now Sumit Podar, founder and CIO at Tikona Capital. Sumit, thanks for taking out time for us. What do you think markets are trying to price in? Because last 2 weeks have not been that great. We've had events like budget, a lot of numbers came in, the whole Adani issue and a lot of news flow around it. What do you make of, how markets are digesting these sort of big events?
Hi, Pankaj. Thanks a lot for inviting me to your show. And yes, we have been speaking since quite some time. And yes, these events are impacting the markets, rather it be budget, which was, of course, a very fantastic budget, rather it be in simplification or use of technology is concerned. All of these things were quite beneficial, and the finance minister actually balanced the budget quite well. Uh, Keeping the fiscal deficit in balance as well as growth into the factor, as well as they have put in the bit of cash as far as uh, in the hands of bottom of the pyramid. And lastly, of course, they didn't tinker anything on the capital gains side. Of course, on top of it, we are kind of the markets are facing the issue as far as one of the largest group is concerned. But on so Pankaj, what is also happening is after 2 or 3 years post COVID, this is what the normalization is taking place. Even if we look at the GDP growth rate of our country, which was higher on the first half side and now kind of moderating, is what is happening as far as the markets, as well as even if you look at the Q3 results, this is what they are kind of posting. There is, of course, a bit of a strength as far as domestic demand is concerned. The export demand definitely is far slower, primarily given the fact that the global world is seeing much slower growth as compared to what India is. And also the margins have got impacted primarily because of the volatility in on the raw material side. But there are I may not really call them green shoots, but shoots or pockets of growth which are quite visible as far as if you look at banking, or for that matter infrastructure, or for that matter even IT numbers were not as disappointing as they were kind of seemed or being envisaged as. Uh, of course, one needs to be worried of volatility in raw
Right,
material.
Sumit?
Yeah,
Right, Sumit. Let's take the conversation forward towards how markets are behaving.
sure.
22 was, of course, a great year for the market. What do you think markets are doing in this last 45 days? You think it's a phase where markets are trying to balance between earnings and the run-up that we've already seen?
Definitely, Pankaj. I mean, what is happening is because of the liquidity that was floating around, we saw markets multiples going up to almost 20 to 23 times on a consolidated basis. But at the same time, many of the stocks were trading at extremely high valuations. And with liquidity or the fear of interest rates going up, we saw those multiples kind of contracting. And at the same time, what has happened is even the growth has relatively slowed down. So as a combination of both the things, we are seeing moderation. Of course, the developed world corrected much earlier. We were outperforming as far as 2022 was concerned. And now in the last 45 days, what we are seeing is moderation as far as valuations of Indian markets are concerned. And there is some catch up or maybe the outperformance of the developed world. That doesn't mean that India is out. We will continue to be a very good market, primarily because our earning growth continues to be strong. We will continue to be a market where the valuations will be higher than many other emerging markets, primarily because of the longevity of growth that we are likely to see. Of course, this year compared to 2022, possibly we will see back-ended returns, primarily because all the businesses which had seen very good growth in first half or maybe in 2022 are likely to moderate and come down to normalization as far as growth is concerned. And second half is where much more clarity will emerge. And at the same time, we will also see the right kind of businesses which are investing in their businesses will come back much faster as compared to the businesses which were typically dependent on the liquidity tap. So once the liquidity tap is either closed or slows down, we would see the real businesses coming up much stronger in second half of
Correct.
2023.
Got it, Sumit. Let's talk about specific sectors. You've been tracking IT for really long. So, when we look at IT, last year was not really great. But,
Right.
if we look at Jan 22, prices were factoring in a lot more. This time around, numbers are okayish. Why do you think there has been an off-late rally in the IT space? You think they're looking attractive now?
Definitely, Pankaj. I recollect that we had this conversation when I was on your show about what is happening with IT. And let me just repeat a couple of key takeaways that were there at that point in time. What I mentioned is this cycle is a bit different. The valuations will be much higher than what earlier cycles of GFC faced by IT. Similarly, tech has become a center stage as far as spendings are concerned. Even if there is a slowdown in US, rather than cutting the tech spends, we would see more of tech spends primarily to have cost takeouts, to have much better revenue traction as such. And lastly, what has happened in the last 45 days, I think we all are kind of watching the news on the economy side. IT stocks primarily corrected because of the recessionary fears in US, but US doesn't seem to nudge as far as any kind of uh, mm, uh, conclusive recessionary data points as of now. So I think since we are seeing the base economy data points continuing to be stronger, we may see IT coming back as far as valuations are concerned. Even if the growth would be a bit slower than what was being estimated, we would see the valuations kind of giving that strength to the sector. And yes, this could be very well kind of comeback of IT as a sector along with banking, as I mentioned.
Uh,
Right.
okay, also, wanted your take regarding banking as well quickly, Sumit, if you can quickly tell us your top bets there and view.
So, as far as banking is concerned, and also what we are seeing in this year, we would be largely more pro towards the larger cap companies, because first half is where uh, the larger cap companies are able to deliver much better. So, if as far as banking is concerned, our top picks are largely HDFC Bank, Axis Bank, and ICICI Bank in that order. Of course, even smaller banks are doing well, but as far as the valuations to the upside that are concerned, we are seeing healthy uptake as far as these banks are concerned. And this is largely driven by strong credit growth, also benefits of techification that is taking place in banks. And additionally, what is happening is the ecosystem, the India stack, which is really we are kind of experiencing in the economy, is going to help these large banks to have better business, better underwriting practices, and better penetration to tier 2, tier 3, tier 4 as such.
Right,
And given the fact that they have lowest cost of funding, their NIMs are going to be much more protected as compared to maybe
right.
second rung or third rung banks.